Hey, what's happening, guys? And welcome back to a very special edition of Technical Tuesdays.
That's right, we haven't been on the Technical Tuesday vibe since March 2020, and the last episode was regarding the pandemic, where we highlighted the importance of toilet roll. So it's been quite a while since, and we've both been on a very spontaneous journey. The world has changed dramatically in the last 12 months since our last episode, so let's get into some points, factors, and some personal experiences, and we'll go from there.
Yeah, and we thought it should be completely random today. We actually, obviously, last time we saw each other was in November in Istanbul, and obviously I've come back to see Sean in Costa Rica, and we literally realized this morning it's Tuesday. So right. We actually planned this Technical Tuesday within like an hour. We were thinking about it earlier, but thought, you know what, let's try and do it. So here we are, guys. Hope you guys enjoy this Technical Tuesday. For me personally, obviously the pandemic, I spent it in London still. Obviously been traveling to Maldives, I went to Dubai, we went to Mexico together, but Sean's been traveling a lot more than me.
Yeah, it's actually quite ironic that in a world lockdown, we've actually done the most traveling ever. And yeah, since the last Technical Tuesday volume, I believe that it was maybe 2 or 3 weeks later, I actually moved out of London. I went back to more or less the countryside in the north of England, where we both more or less lived before moving and migrating the business to London. But again, even since the last episode of Technical Tuesdays, when we did highlight a few issues and tried to make, you know, a humor out of it, as you guys know, the world, and especially you guys in London, and even in the markets, there's been a lot of turmoil and there's been a lot of forced changes that many of us have had to make in our life, business-wise, family-wise, and yeah, it's been a roller coaster to say the least. So I moved out of London, had 3 months in our first initial lockdown in the countryside. We continued business in London, even though that the office had been, in 1 year, the office has actually had to be closed for 8 months out of the entire year. So that's 3/4 of the year, but we've kept things going. We've expanded Astro as a brand, and we've grown a lot, even in the last 12 months alone, since the initial lockdown. So I know that many people are thriving right now in business, and a lot of people also have to adapt to the current times and not being able to open doors in whichever business you are in. So yeah, we're going to give you some of our story and what we're up to right now, why we are here in Costa Rica, so on and so forth.
Yeah, so of course, as you guys know, we break Technical Tuesday up in 2 sections. Sean's going to hit you with the charts in just a few minutes, and I thought, let me go through and explain something that I called astronomics, forget economics, astronomics, which is going to be a little bit about what's going on in the world right now, and we'll talk to you about unemployment, GDP, and where I see the US dollar going, which is very important right now. So let's hit you with what's going on in the world. So guys, as you know, this is episode 56. Now, for everybody that's an accelerated member, you would know that every single morning I break down what's happening in the world of economics, and I call that astronomics, and I'm going to give you guys a small sample of that right now. So let's start off with everybody who firstly survived the last year, because of course, as Sean mentioned, a lot of companies, a lot of corporations, a lot of big brands did not survive the pandemic. So if you did, firstly, congratulations to you. And you know, I can talk about a lot of different economies right now which were affected because it was a global pandemic. This wasn't just a singular problem. This is a global problem. But in this video, I'm going to talk about the main economy, which is of course the US, as that is a default currency of the entire planet, and that is what we need to focus on to see how strong the dollar is to affect our trading. So let's just start off with the US. Now, in the US, let's just take unemployment. Unemployment is normally around 3 or 4%, but in the peak of the pandemic, it was up to 13 and 14%. Guys, that means 1 in every 7th American was unemployed. Guys, GDP, which is usually around, again, 1, 2, 3%, was actually at minus 30%. That means the economy shrunk by 1/3. So, you know, we definitely all had our backs against the wall, and the US is just an example of what happened in a lot of different economies, including London, including, you know, the rest of the world. And so what we're watching right now is a fast track of what's happened, and we've actually seen the economy recover. A lot of people thought it might take longer to recover. A lot of people watching the news right now are still under the impression that, you know, recovery is a long time away, but I'm here to tell you that we've actually done quite a V-shaped recovery in a lot of the markets, and I'm explaining that right now because the current figures, so that 14% unemployment is actually now back at 6%. Guys, the GDP, which was again minus 30%, is now at 4.3%. And let's talk about the 10-year Treasury yields. Now, if you haven't seen my video on the most important chart or most important bond in the world, make sure you check that on our YouTube channel. Now, again, in the peak of the pandemic, that was at 0.5% yield. We currently sit here at 1.7%. So you've got all of these different factors that are driving a very strong US dollar. Now, it's not only FX that actually did a massive recovery. So again, guys, you have to ignore almost what you're seeing on the news, because that's all lagging information. All the stuff that you're seeing on the news is describing the past year, not describing what's going on right now. Because not in the FX market, but in the stock market, you've got S&P 500, you've got DAX at all-time highs. And the constant data that's coming out for the US and a lot of different economies, if you look at the pound has pretty much came to pre-Brexit levels. And of course, that's got a lot to do with the vaccine distribution, but it's all about optimism. Now, over in the UK, we're hopefully going to come down out of lockdown in possibly a few weeks' time. We'll have to see what happens. But also with the US, with all the data now coming together, we're seeing quite a firm dollar. And also, obviously, you can see that in the stock market. You can see that in loads of different factors. And if you look at the 10-year Treasury yield, which I explained in a previous video, you know, if you look at the Federal Reserve and you look at all the announcements that's happening in the world right now, the Federal Reserve have two main things, a dual mandate. Number one is stable prices, and number two is maximum employment. And guys, if you look at non-farm payroll was expected at 625 and it came at 916, so way outside of its range. However, of course, there's three important things that happen on Friday of the non-farm payroll. You have the non-farm payroll jobs added, which are the figures I just mentioned. You have the unemployment rate, which is at 6%. So again, that's recovered nicely. And of course, you had average earnings that came out 0.5% down. So I feel like with the non-farm payroll figures coming out really well, we have US CPI next week. We have an overall real optimistic dollar. So again, this is also in the pound as well, again, talking about that recovery. And, you know, even the Federal Reserve have actually announced that they do not intend to increase interest rates for the next 1, 2, or 3 years. You cannot look at the 10-year yield, you can actually look at the 2-year yield. And if everything goes the way it's meant to, and everything, the unemployment rates fixed, GDP's back up, there's more spending on America, we could see an interest rate hike sooner than we think. So if anybody out there that's trading right now, you know, if you're trying to figure out what's happening with the US dollar, for me, it's a very, very firm dollar, and it's going to be for the next several months, as long as the data remains strong. And even the Federal Reserve has said that any kind of changes that we made will be data-based, not anything else, will be data-based. So everyone look out for the 10-year Treasury yield. I feel like the dollar index needs to stay above 92, which I feel like it will, and you're gonna have a very, very strong US dollar. So if anybody else trading right now, keep those factors in mind, and let's just see if the optimism continues. That will hopefully help your opinion of what's happening in a lot of different markets, stocks, emerging markets, and FX. Now I'm gonna pass you over to Sean to tell you a little bit more about what's happening on the technical side of things.
Okay guys, that was Natt's partition in the video. Now just touching back to a few things that Natt actually mentioned, and which we both mentioned at the start of the video in the introduction. There's been a lot of change in the world, a lot of change in human psychology. There's been a split division in the mass psychology, and also being able to adapt to still being able to run a business, still being able to be mentally with it every single day, because as you guys know, in certain countries, especially the UK right now, back home, there's been a lot of tension, pressure, and situations that have come out of nowhere, which again people have to adapt to. There's been major tests on various different angles, and if we can relate that to the market as well, touching back on what Natt said, in the last quarter or so, I've just been monitoring the market mainly. I haven't really been super active when it comes down to trading since my Dubai trip, which was into December to the start of January. I had a little bit of time off and I came to South America, and I more or less, you know, as the world tries to, well, is trying to, and people are trying to figure themselves out and grow and evolve through some, you know, hardship and some bad situations, I took the time out myself just to enjoy life, live on a more simplistic basis. As Natt mentioned, the last time we seen each other was November on his birthday. And for you guys who don't know, I've explained this on social media, on some of my IGTVs, and thank you for all of the positive feedback from those videos. But I actually went away at that time for 4 days, and I packed for 4 days, expecting to return back to the UK to continue life and business as normal. Once I heard the announcement of the next lockdown at that period of time, I went on a crazy journey, and I've not been back to the UK for 6 months in total. So again, once it's funny to say, but once you actually step out of that arena and you have, you know, a space like this to chill, nature, relaxation, and you can actually have time to metabolize all of the commotion in the world, you can start to piece things together. So in the markets in general, I took those 3 months out after having an amazing last quarter of 2020 and a bit of a party as well, to actually just enjoy myself, enjoy different locations in the world, and also metabolize information from the mass psychology of some of the craziness in the world, and also try to see how that relates into the market volume, liquidity, and momentum in general. So right here, if we look at the charts, I've just been studying, again, some of you guys know, gold, GJ, and GBP AUD. So what I'm going to go through in this small segment of the video is some of the things I look for, and to allow trading, especially when I'm away and I'm traveling and the time zone being completely different to back home. I have taken time out. I'm not so much modified my strategy, but again, you guys who've been joining the Astro webinars have seen how I am trying to put into perspective, live life first, enjoy the fruits of your labor, and allow trading to work for you, rather than the opposite. So the point being is that, number one, the madness in the world right now, you have to look where the major lockdowns are. A lot of trading liquidity comes from the City of London. Now you have to also think, number one, that how many people realistically are, number one, going to work. Absolutely, well, no one back at home at the moment. I mean, it's been on and off. Even again, from our situation with the office being open, what, 1 quarter out of the whole year. And imagine the financial institutions who have to adapt to that, and their work efforts and work rate, their investments, their general daily baseline structure on how they manage their business and their capital, as an example, okay, how that is actually affecting market volume. Now, a second to that as well, you've seen how many of you guys are with us on the Cryptonary ship at the moment. You've seen how in the last 12 months alone, how much volume has been pumped into the cryptocurrencies, mainly, let's say, Ethereum and Bitcoin as well. So as many businesses have to adapt, a lot of them, whether you're a high street business, you may have to adapt to bringing your products online and marketing in a completely different way to stay on top. Imagine the financial institutions, etc., who have that their employees can't go to the City of London every day, and how that's affecting volume in the market. And secondary to that, adapting as a business from putting major bets on, let's say, gold or any currency pairs, just to relate it to this video right here, their interest on how much liquidity and how much volume has now come into, and even the market caps of some of these cryptocurrencies, where their interests are going as well. So you have to, I'm not going to sit here and say we can't even measure how much volume per day is going through a specific instrument in the currency market, or even in gold in general, but we have to just think about, and I've seen this by stepping out of the market. I've always been looking at the market, you know, on a relaxed basis to see how things have been going in the last quarter or so. Now I'm fully active again, but I've personally seen volume, unexpected market movements, not even really based off news, but it's been very, very sloppy as it was in comparison to the last 12 months alone. So again, that's just my thesis and my understanding of living in London, you know, looking at the city, how many people were going every day to work at these financial institutions, and also the crypto market booming. Where is the money going? Where's the interest going? And we can relate that to the market, and having those timeouts, again, this is why I'm here, metabolize the information, metabolize what's going on in the market, and see where just small pointers and small pieces of information that not a lot of people think of, especially when, again, relating to Forex. So what I'm going to firstly start with, with those points being said, is Gbp Jpy. Now, what I'm looking for mainly on a weekly basis right now is the main swing of the week. We could be in a cycle from the prior week and the cycle hasn't finished. It may overlay into, let's say, the Monday and the Tuesday. And then we're looking at more or less like fake out, let's say on the weekly time frame. So let's start with the weekly time frame. I'm just going to give you guys a few points of interest just to lay some solid foundations and pieces of psychology / mentality to allow you to take. And again, one major point that I actually expressed on the last Astro webinar was that a lot of people now, especially back home, I'm going to keep relating to the UK, is because that people, again, there's nowhere to go. The gyms aren't even open, okay? But a lot of people and a lot of feedback from the Astro clientele, they're telling us that, okay, I'm at the charts maybe 8 hours a day, 9 hours a day. Now, me and Natt used to do that, especially when we started in the market. However, it can be quite destructive as well. So I'm going to give a few points and piece of interest here, how to make your trades more powerful, and also think about money, not the money management aspects that comes like primary, but the position sizing techniques, especially whilst some of the currency pairs volume and liquidity is slightly low, how to get around that, and also try to, again, make the market and trades work for you rather than you trying to sit there 6 hours a day, 8 hours a day, because you can't go and do, you know, the standard leisurely activities. You can't go to the gym, etc., etc. So here on the Gbp Jpy chart, what I'm looking at is the past every single week of the week gone. I don't do analysis on the weekends. I can come in, look at the chart, preferably on the Monday afternoon, and look at the previous high and the previous low of the previous week. So what we have here, if I just go in and plot one or two formations, is that we have the high of last week, which pins in at 153.23, and then the previous week we have the high which printed in at 151.55, nearly 150, nice little psychological level right there. And basically what we can see, and many of you guys watching this video will agree with me, that if you look at, let's say, some of the standard retail stuff or patterns on a weekly time frame or weekly chart, it is very, it's extreme, it's unreliable. You can't base a directional bias simply from relaying those tools onto a weekly time frame. So what we can see here and what I look for on any instrument, my focus is GJ, GA and gold, is the previous weekly highs and lows. And what I'm looking for is I have a forward thinking as to where the potential spike could be formed. So here what we can see is that the highs are always being breached, but the majority of the time they're breached. The spike for the high, the spike or the weekly high is formed, and then the market reverses in the opposite direction. But you cannot simply, there's so many different factors, and there's all of these retail tools which you may use that will give you the wrong answer, more or less, so to speak. So right here, what we can see is the previous weekly high. We can see right there, 22. We've already opened slightly lower. We popped above the high and we've made a high 22 pips higher, okay, than the previous week. Then what I do, I can come into the daily, and as you practice even just the weekly highs and lows, and you can see how fakies come in and out, in and out, in and out, we can then come into the daily to try to put pieces of the puzzle together to see where the main weekly swing is. Now, as you can see here, we came through the high, 1, 2, 3, with the momentum has completely slowed down. If I was to put the crosshair where the bodies of the candles are, you can see 153. So we've had 1, 2, 3 spikes at the high, and then we've had a dramatic turn in price. We've had even, what is it? Tuesday going into Wednesday right now. 1 second. Whilst living, my life is kind of like one big day right now. I don't really keep up with too much which is going on in the financial world or just the world in general. I feel like me personally, I don't like to get sucked into whatever's going on in the world and all of this like brainwashing agenda. So I just run on my own complete time, and we're going into Wednesday. However, Monday candle, the closure, as you can see, the tip of that, we've spiked through the weekly high, we've rejected it, and then we've actually dumped 200 pips on the GJ. Now, weekly time frame, I'll just give you some nice tips there. You can go back and back test this yourself on numerous pairs. But we can see that now we're starting to going into Wednesday, we're coming into the midweek reversal. So it tells me that Monday, Tuesday, we've actually completed the previous week cycle, which was bullish, as you can see right there. And we're now resting formally on one of the previous weekly areas. So as you practice this week by week, you don't have to go in and draw a million lines in a million different places. Just look at the weekly highs and lows and start to figure that out yourself. As you can see here on the 4 hour as well, we can bring in some confluence from the body highs right there. And also, we can go into the intraday chart, which you can see here. Many of the Astro students on some of the webinars I've introduced to you guys reading volume, which is quite straightforward. The high volume areas on the intraday chart, and my preference is the 30-minute time frame, is where I can start to build up confluence on this zone right here. Again, I'm not going to give too many things away, but you guys can go and dig deeper into this yourself. On the high confluence areas, this is where I'm more or less building and drawing my levels from. I'm not looking at like 30-minute hourly or even 15-minute, 10-minute areas, apart from session highs and lows, which I can see in my head due to a lot of practice. But what I'm doing now, because of the factor that I've mentioned about volume dying, liquidity dying, nobody being able to go to general work in the major institutions that are pumping money into the market, and their interest actually changing and being migrated into the cryptocurrency field. What I look for here now is the high volume areas as to where to look for scaling in some positions, and also going in alignment with the weekly areas, the weekly fake outs, and looking at where the cycle goes and moves to. Alongside this, you guys who are members of Astro and have the access to the terminal, Natt's videos are golden when it comes down to actually researching and gaining a higher insight into the fundamental knowledge. Now, I would say that before the lockdown and the major changes in the world in the last 12 months, price action for me, and reading the price action data when the world was quote unquote normal, accounts for 75 to 80% of your thesis in the market. You're more or less, you could put fundamentals aside 20%, and you could gauge your market decisions, judgments, and trades 75-80% of the way. Now, the way the world is changing, and that's why we've added a lot more insights and a deeper information into the fundamental aspects of the market. I believe that you cannot judge price action to that caliber anymore. You now need to bring in a lot more of the fundamental value. So being able to read volume on an intraday perspective, knowing where and the simplicity of where these market cycles are, bringing those together with the fundamental knowledge, and also having awareness of what's going on in the world, you are able to keep up with the times, because the market isn't going to consistently move on that level forever and ever and ever. So that's what we're doing here at Astro. And again, due to I'm not waking up at 2 a.m. in the morning, 3 a.m. in the morning to try to catch on to the London session. I am, splitting my positions. Let's say, as an instant, you're used to using just 25 lots. You have your risk reward factor. You have that one-dimensional way of seeing the market. Here's my stop. Here's my target. Now, for me, because I'm not going to be up for the London session, I take that 100% position, let's say 20 lots for instance, and I'll do 5 lots, 5 lots, 5 lots, 5 lots. I'll find an area, I'll be ready for the market to go against me. If it does, it's a bonus. I'll be looking at high volume areas as to where to dump the market, and allow even just 1 trade or 2 positions a week to work for me, rather than trying to wake up every day forcefully and making trading unenjoyable. Which again, I've had so much feedback of people that trading can become super unenjoyable when you're locked in the house all day, you can't go and exercise, all this bullshit that's happening at home. For me, that's why I stayed out of the country, and I continue to live life and then make trading adapt to myself. But there are just some pointers and pieces of information that I found. We've got gold over here as well. Same scenario. I'm not going to go as deep on gold as I've just have there. I'm going very, very fast right now, but hopefully you can pick up some pieces of information. It's always good to just drop some seeds and drop some gems. But here with gold, for me, we are now approaching one of our previous weekly highs at 1747. And we have a high volume area which is being printed for the US session. So what I'm primarily looking for here is for volume to step in only upon more or less a break of this area, given the fundamentals are also in check, and go for 1 or 2 positions that may lead gold down into, even look at this 4-hour level over here. All of these are 4-hour areas taken from the bodies. But I do believe that gold, we can see a flip side reversal now with a little bit of positivity from the dollar index. We can see gold come into 1723. Here on the micro scale, we got the 3-minute, which I use only if I've got time to sit there and look at the chart. And we have the 10-minute as well. So more or less I'm looking for the break below. I have this here copy and pasted from the one above, so a high volume area given from the US session, which is about to end. And I'm going session by session, looking at where the volume is, getting that, stacking it onto the higher levels, and giving the market some room, and splitting the orders up, enjoying life at the same time, but again, keeping aware of the current market conditions due to what the big guys are actually doing and where the crypto market interest is coming in as well. So anyway, I'm going to stop right there. Thank you. I'm going to stop right there. And yeah, give us some feedback on the videos, guys. All of this information is available in the Astro Terminal. And yeah, look out for more content from us very, very soon. But it's good to see you all after a year. Keep up with our Instagram for further updates. And all the best for the month ahead. Happy Easter.